Every day, thousands of crypto analysts publish their price predictions. Bitcoin to 100,000. Bitcoin to 50,000. Bitcoin is about to explode. Bitcoin is about to crash. And you know what? Most of them are wrong. Not half the time, but most of the time. I don't say that to mock them. I say that because predicting the future is genuinely impossible. The market is too complex, too fast, too irrational at times. But here's the thing. You don't need to predict the future to trade and invest well. What you need is a system that keeps you prepared for multiple outcomes at the same time. In the next 14 minutes, I'm going to show you exactly that, the 3-scenario framework. The tool I use every single week to analyze Bitcoin and stay ready no matter which direction the market decides to move. Let me show you the most common pattern I see among crypto investors. They open the chart, they spend 5, maybe 10 minutes looking at it, and then they make a decision, up or down, they pick a side, and then, this is the part that really costs them, they become emotionally attached to that prediction. If the market goes their way, they feel smart. They hold longer than they should. They add more. If the market goes against them, they feel like they made a mistake. They either panic and sell at the worst moment, or they go into denial and hold through a much larger loss. Does this sound familiar? This is not a character flaw. This is human psychology working exactly as designed. Our brains are pattern-seeking machines. We want a clear answer, up or down. But the market doesn't work in clear answers. It works in probabilities. And here is the single most dangerous idea in crypto investing. The belief that you can know, with certainty, which direction price will move next. The moment you commit to one outcome and only one outcome, you've already lost your edge, because you've stopped preparing and started hoping. So, what do professional traders do differently? They don't pick one direction. They map out all possible directions, and they prepare for each one before the market moves. This is the core of the 3-scenario framework. Instead of asking, "Where is Bitcoin going?" you ask 3 questions. Question 1, what happens if Bitcoin continues higher? Question 2, what happens if Bitcoin breaks down? Question 3, what happens if Bitcoin goes nowhere and consolidates? For each of those 3 questions, you identify 2 things: the trigger, the specific market event that confirms this scenario is playing out, and the action, exactly what you do when that trigger fires. When you have all 3 answers ready before the market moves, something powerful happens. You stop reacting emotionally to price swings because you've already decided what each scenario means and what to do about it. The market moves, and instead of panic, you have a plan. Let me show you how to build this on a real Bitcoin chart.
Get daily crypto insights by subscribing now.
Before we go into the 3 scenarios, you need 2 things on your chart: key support and key resistance. These are the 2 anchors around which all 3 scenarios are built. Let's start with support. Support is a price level where Bitcoin has historically found buyers. It's a zone where, in the past, every time price dropped to that level, demand stepped in and pushed it back up. It's not a magic line. It's a record of where buyers have repeatedly shown up. Now, resistance. Resistance is the opposite, a level where Bitcoin has historically found sellers. Every time price approached that zone, supply came in and pushed it back down. Together, these 2 levels create the range. And your 3 scenarios are simply this: what happens above resistance, what happens below support, and what happens in between. To find these levels, you don't need any indicator. You zoom out to the daily chart. You look for the last 2 or 3 areas where price clearly reversed. Where did buyers step in repeatedly? That's your support. Where did sellers step in repeatedly? That's your resistance. Mark both levels. Now you have your battlefield. Scenario 1. The bullish continuation. This is the scenario where Bitcoin breaks above resistance and continues higher. But here's the key word: confirmed. Not a wick above the line. Not a brief spike that gets immediately rejected. A confirmed daily candle close above resistance. Meaning, the 24-hour candle opens, trades above resistance, and closes there. That confirmation is your trigger. Why does this matter? Because false breakouts, where price briefly crosses a level then reverses, are extremely common. If you jump in on every break of resistance, you'll get stopped out repeatedly. The confirmed close filters out the noise. When scenario 1 confirms, what do? First, you identify the next resistance level above. That becomes your target. Second, you look for entries not at the breakout candle itself, but on the first pullback to the broken resistance. That resistance, once broken, often acts as new support. That pullback, with the right candle reaction, gives you a better entry with a tighter stop. This is called the breakout-retest pattern, and it's one of the cleanest setups in all of technical analysis. Scenario 2, the bearish breakdown. This is the scenario where Bitcoin loses key support and continues lower. Same rule applies. You're looking for a confirmed daily close below support, not a wick, not an intraday dip that recovers. A close. When that happens, two things change. First, your bias shifts. The level that was support now becomes resistance from below. That's called a polarity flip. The same price level that once attracted buyers now attracts sellers. Second, your target moves lower, to the next significant support zone below. Now here's the most important rule for this scenario. Do not try to catch the falling knife. This is one of the most costly mistakes in crypto. When Bitcoin breaks support aggressively, with volume, with momentum, the instinct is to buy the dip. It looks cheap. It looks like a discount. But aggressive breakdowns often continue much further than anyone expects. What you wait for instead is the retest. After the initial breakdown, price often rallies back up to the broken support from below. It touches that level and gets rejected. That rejection, that failed retest, is your confirmation. It tells you the breakdown was real, and it gives you a cleaner, lower-risk entry point. Scenario 3. The sideways consolidation. Bitcoin stays between support and resistance. No breakout, no breakdown. The chart just chops back and forth. This is by far the most common scenario, and the one that loses the most people money, not because it's dangerous, but because it's boring. Boring makes people impatient. Impatient makes people take trades that aren't there. The professional's approach to consolidation is simple. Do nothing. You watch. You wait. You pay attention to two things. First, volume. Is it shrinking as the range continues? Shrinking volume inside a range often means the market is building energy for a move. Second, the quality of bounces. Are the bounces from support getting weaker? Is price spending more time near resistance or near support? These are clues about which direction the eventual breakout may come from. But until Scenario 1 or Scenario 2 triggers, you have no trade. Consolidation is not a problem. It's the market preparing the next move. Your job is to be ready when it arrives. So here is how you put this into practice. Starting this Sunday, open your Bitcoin daily chart. Draw your key support level. Draw your key resistance level. Now write down 3 sentences. Just 3. Sentence 1. If Bitcoin closes a daily candle above resistance, I will ... Fill in your action. Maybe it's add to my long position on the first pullback. Sentence 2. If Bitcoin closes a daily candle below support, I will ... Maybe it's reduce my exposure and wait for a retest before re-entering. Sentence 3. If Bitcoin stays between support and resistance, I will ... Maybe it's hold my current position and watch volume for clues. That's it. 3 sentences, 3 scenarios, 3 clear actions. This weekly ritual takes maybe 15 minutes, and it fundamentally changes how you engage with the market. You go from reactive to proactive, from hoping to planning, from guessing to preparing. Your analysis is not complete until you can answer all 3, not 2, all 3. Because the market doesn't care which scenario you were hoping for. It's going to do what it's going to do. And the only edge you have is being ready for all of it. Next Saturday, I'll apply this exact framework to the current Bitcoin chart live. You'll see all 3 scenarios mapped out in real time, with real levels and real triggers. If this gave you a new way to think about analysis, subscribe. Every Saturday, we go deeper on the systems that give you a real edge. Every Monday, Wednesday, and Friday, real-time market breakdown. I'm Dax. This is Dax Crypto Lab, where analysis becomes action.